Welcome to the Mayor of Money podcast with former Burlington Mayor Rick Goldring of Goldring Financial Leadership. In this podcast, we provide successful business owners, including doctors and dentists, with insights to minimize tax and risk while maximizing retirement income and future legacy. Join us for this journey as Rick draws from years of experience and guest experts, including successful entrepreneurs, to provide unique strategies and approaches to estate and financial planning matters, as well as business in general. Now, on to the show.
My guest today on the Mayor of Money is Wallace Howick, who's an award-winning author and accomplished financial professional. He's a Canadian chartered professional accountant who was elected as a fellow for his distinguished service to the profession. He has over 40 years experience in financial services, serving as a partner in a global accounting firm and an executive officer in a large North American bank. His academic background includes earning a Bachelor of Arts degree in economics and an MBA on a full scholarship. He's a sought-after speaker and a Harvard-trained negotiation dispute resolution educator. And for many years, Wallace has been a volunteer and contributor to financial literacy and financial capability outreach programs. So Wallace, a warm welcome to the Mayor of Money. Thank you very much for doing this with me today.
Good morning, Rick, and thank you for inviting me.
So listen, the part of your bio talks about your involvement with regard to being a contributor and a volunteer around areas of financial literacy and financial capability outreach programs. Can you give us some detail about what those particular programs are all about and who are the people that you serve with those programs?
Let me pick an example very close to my heart, my own profession. CPA Canada has a financial literacy program and outreach program. And it began about 10 years ago. In fact, I was on the original advisory committee around the early days of that outreach program. And it has a lot of elements. Some of them are podcasts where people like myself are invited to come and share thoughts in an interview, not dissimilar to this one. There are on-the-ground outreach programs where there were just recently some, I think, at the Hamilton Library, as an example, to pick something in the neighborhood, about fraud, about financial management. So there's an array of topics. My interest springs from not only my financial skills, but my interest generally in literacy. I've learned a lot. I hope I've given as much as I've learned. But CPA Canada has been doing an outstanding job for over 10 years.
Now you're the author, best-selling author of a book. I'm showing it here, Love and Money, Conversations to Have Before You Get Married. I would think it's also conversations to have while you are married, and because your marriage will change, your financial situation will change, the different decisions you'll have to make will be different at age 50, 60 than they were at age 20, 30, 40. But you've written this book, and it's a great book outlining some of the issues that married couples can have around money. But what prompted you to write the book?
Well, it's the confluence of several events, each of which is some distance in time apart. When I was really young, one of my professional colleagues, very early in his marriage, was divorced. And I was surprised. I was newly married myself. And I was surprised to learn that money was the issue. And I sort of tucked that away. Then several years later, I was out speaking in Edmonton on behalf of one of my clients, which at the time was one of the largest financial houses in Canada. And it was one presentation in a series of 12 across Canada. In each city, the top advisors in that city were invited, and they were invited to bring two guests. At at the end of the open session, I would always hold the floor open for questions. And I would stay to answer questions for any of those who didn't want to ask or didn't get a chance to ask in the open session. This particular evening, the second to last person in line was a 40-year-old professional, very interesting woman, and she had a relatively sophisticated question around tax and investments. And I answered her question and stopped. And she looked at me and she said, I'm involved in a very messy divorce. She paused, said, we never talked about money. We only just argued, and sunk into sullen silence. And after a moment, I asked, unforgiving silence? Yes. And I began to realize that it wasn't just financial literacy, knowing the things about finances. It was about process. People didn't know how to talk about money. Now, part of that is societal. You know, there are several things we don't talk about in good company: money, physical intimacy, religion, and politics. But within that category, money has a special status because we're worried about being judged, shame. We're worried about being taken advantage of. We're worried about being misunderstood. We're worried about being compared. So it struck me that there were two things to do here, if I could. One was to help with the acquisition of financial literacy. And financial literacy is certainly about the acquisition of skills, numeracy, budgeting, and it's certainly about the acquisition of knowledge, about credit cards, mortgages, some knowledge of taxes, in the hopes of making well-informed financial decisions. In short, becoming financially capable. But financial capability is more. And that more is at the intersection of self-awareness and an understanding of the pressures and environment in which we make financial decisions. And so the book was aimed at young people, because if we can get young people started on the right foot, small changes early in any path change the trajectory dramatically. But it was also about how to talk about money.
Interesting. There's a great quote on the front of your book by Kelly Keene, who's a personal finance educator and best-selling award-winning author. And her quote is this: "We all have money scripts we're running, some helpful, some deeply destructive, and as a couple, financial issues can erupt in a myriad of ways." And talking about the subject isn't an easy task, and she goes on to praise your book, and it's a must-read for any couple. Now, can you talk about the money scripts? Are you referring to the fact that the way people have been brought up by their parents is going to affect their views on money, whether how they view risk, how they view saving, how they view spending, how they view debt, how they view investing, and so on and so forth? Can you elaborate on that?
Yeah, that's a really good insight, Rick. You're absolutely right. That we acquire a lot of our attitudes, beliefs, and values about money from those around us, family members, close friends. What's really critical is not only do we acquire them passively. And as a result, we rarely give them conscious thought. Now, that's not to say they're not powerful. It's to say they operate below the surface and they are powerful. And one of the reasons I targeted the book at young couples entering a committed relationship is, you know, people come to a relationship with hope for the future and commitment to the future. Well, the success of that future depends on an understanding each of the other and using that understanding to work together. Well, if I don't really have a good understanding of my own attitudes, beliefs, and values around money, let alone those of my partner, successful financial management becomes difficult at best and actually often quite unlikely. So one of the key things I try to do in the book is give folks some tools to surface those attitudes, beliefs, and values and talk about them.
Yeah, it's I can see it being easier said than done, because you know, the lady that you talked to after that session you gave, where she asked about tax, but she wanted to know, it came out that she had a divorce really because of money, because they are partly because of money, because there was no common ground. They didn't were able to even talk about why there wasn't a common ground or how they could get there. It was just they weren't even able to talk about it.
Yeah, and I think so. One of the things we do in the book is offer a list of questions that a young couple can use. In fact, any couple. I was recently interviewed by CBC Radio, and the commentator made a comment not dissimilar to yours. If you miss this step early in your marriage, now's a good time. And so I think that it's never too late. Take the list, and that list will help you surface these questions, and do it independently. So I'll do the list, my partner will do the list, and then we'll sit down and talk about our answers to those questions. And there's some guidelines on how to have that conversation, not just surface your attitudes, beliefs, and values, but now how to talk about them and ultimately reconcile them.
Well, that's where your negotiation, dispute resolution background has contributed to the book to some degree.
It has, Rick. That's a really good observation. Yeah. You know, and I'm always careful about using the word negotiation, and I always put the word principled in front of it. And I do that for two reasons. The minute you mention the word negotiation, one of two things happens. Some people lionize negotiators and think they have a unique, innate set of skills, the acquisition of which is improbable or indeed impossible. And they think of people like Colin Powell, Madeleine Albright, Angela Merkel, and go, well, that's not me. Some others think of negotiation as elbows out, aggressive behaviors.
I think of it as win-lose. A lot of people think about negotiation as a win-lose.
Yeah, absolutely. Yeah. And for those people, the characters in these iconic Wall Street movies come to mind, and they think, well, that's not me. I'm not that kind of person. Negotiation, at its heart, Rick, at its heart, negotiation is one fundamental phenomenon. It is the reconciler of needs. And because it's a reconciler of needs, it is a facilitator of successful relationships. So I just want to repeat that. It's a reconciler of needs and therefore a facilitator of relationships. And what's the most important relationship we have? The person that we are in a loving and committed relationship with.
So, you know, a new couple starting out, they go through the exercise and they attempt to have some common ground going forward and common understanding. And how do people reconcile the different views about certain things? For example, one may have a view that, oh, my parents were very successful investors in the stock market. They did very, very well. And I learned a lot, and I would never put my money in a guaranteed investment certificate at a bank to earn a guaranteed return, you know, compared to investing in the stock market. You know, when you do it well and you buy dividends, you're going to do far much better. And then you've got somebody that's come from a family that has not the same level of or same financial literacy and understanding of different approaches to money that's out there. How do you what's the part of the process that helps, reconcile those differences?
Well, the first thing is to surface them and listen. One of the things, so that there's an understanding. One of the challenges is to model the behavior that you want to elicit. So for example, if you want to be heard, listen. If you want respect, be respectful. Because what can happen is there can be a disdain. Let's take the partner that comes from a family that are successful investors. There can be, as there was in the tone of your question, a disdain for GICs, right? Guaranteed investment certificates. So it's to surface what need is met by those varying approaches. And clearly the partner from the family where GICs were a more important element of their savings program, there's risk, there's worry and concern about risk. I just had an interesting conversation with a professional woman, experienced professional woman, probably in the cohort 40 to 49, but I didn't ask. So this is a woman of experience. And she said to me, she said, I let my husband handle the stock market part of our investments because I get too anxious. I see a stock go down and say, well, we got to sell so we don't lose more. And he'll say, well, we're not doing that. This is a really good company. So these folks have balanced her need for security and his need for growth of investment. And neither of them is right and neither of them is wrong. What is right is to find the balance that they can each be comfortable in. Each be comfortable in.
Yeah, I always get a little uncomfortable when I hear the situation, I let my wife handle everything, or I let my husband handle everything, because at some point, one of them is going to be left on their own, and they're going to have to deal with it. And so it's a case of, we all should be educating ourselves, even though we're letting a partner who has particular expertise in the area focus on that area, but we should all educate ourselves and enhance our financial literacy by at least having some understanding of the approach, the general investment approach, even broad strokes, about what our spouse, our partner is doing.
Yeah, I think so. And I don't very often share a personal story, but on that one, I will share a personal story. Sometimes an advisor's children, a financial guy's children and family can be the cobbler's children. They're not well shot. My children were well shot, so was my wife. But I had handled all of the financial aspects of our life together. And my wife was helping me pack my bag. I was headed to Europe for a 7-day run. And I had asked her if she would do a couple of things while I was away, attend to a bill and a matter at the bank. And she, of course, said she would. And she said to me, she said, when you get back, can we have a conversation so that I can help do this consistently and I have a better understanding of where we are? And I turned to her and he said, you bet. And that's one of the best 3 or 4 sentence conversations we ever had in terms of our long run well-being as a family. So there is that tendency, and it's most predominant in families where, I heard a financial commentator and journalist seemingly quite proud of the fact that he does it all in his family. I was surprised to hear that, but I was surprised at the emphasis he put on that. So you're absolutely right. It's imperative. And, to To make the power of that point, I did it by the platform of the book. I had a woman ask me in Toronto a couple of weeks ago. I was speaking in downtown Toronto, and before I started to speak, we had a brief conversation outside the auditorium. She said, why conversations? Because many of your viewers won't know, the book is written as a conversation between myself and a young couple. And her question was, why did I choose that platform? Answer, it's a book about conversations. I didn't want to write a book telling people what to do. What I wanted to do was illustrate the importance of the distinction I made earlier between financial literacy and financial capability. And that's the ability to become self-aware and have constructive conversations. And so by inviting the reader to 8 conversations with Mark and Michelle, the book became a metaphor for its message around conversations. And equally important, at the end of each conversation is a section called Now It's Your Turn, where they can go and apply what they care to adopt or adapt to their own lives. So there's a series of exercises, sometimes additional information. So your point about reconciling is exactly the point of the book, is to help folks do exactly that. Because unless, some things travel well over time. When Seneca, when Rome was in a lot of trouble, Seneca was one of the great political figures and speakers at the time. He opened a speech with, unless we know the port for which we steer, no winds are favorable. And he's absolutely right. And I would add, and if we're each pulling our oars in different directions, we're never going to get a favorable wind.
Yeah. No, absolutely. I think, good for you on the focus on the process. I can see some couples wanting to work at this, thoughtfully, but would appreciate some guidance as to how to reconcile some differences, recognizing that they want to reconcile the differences, but what's a practical outcome of actually reconciling differences on a particular money issue, whether it be the amount of mortgage you're willing to accept on your, in buying a house, or the amount of money you want to invest in different investment approaches. I can see there. So you're basically saying, here's a process, have the discussion, and hopefully you can figure it out. But I can see another book for you to write, Wallace, on some examples of what people have done under different situations, because every couple's different. And so I can see possibly a 10-chapter book for people at different ages and dealing with different financial issues about how they reconciled some of the challenges. One wants to buy a bigger house, one doesn't. One wants to pay down the mortgage and doesn't like debt. One is comfortable with debt. One wants to be aggressive investing in real estate. One thinks that's really risky, and so on and so forth. I see another book coming for you. More than happy to help you with it too.
Thank you. Listen, could I hire you to go and talk to publishers? You're absolutely right. And in the book, I actually share some of my experiences in the conversations with Mark and Michelle. And I try to provide some framework information. So on the chapter about savings, there's actually a chart in there that compares saving through a TFSA to your RRSP. And that can be important. It tries to capture the key differences between the two. But before I do that, to your earlier point, the most important thing you can do around savings is get started.
Absolutely.
Get started. One of the other things in the back of my mind about this book and getting started reminds me of it. I talk to a lot of people later in their lives, and they have regrets. And regrets are not a bad thing. Regrets, I want to repeat that, regrets are not a bad thing. What they tell us is what was important to us at a moment in time, where we want to be, and illuminate that path forward. But the most frightening regrets I've heard and I've been at this a while, is regrets that involve two, as in I spent too much money chasing too many illusions to fill too many holes. And that's probably the most powerful regret I've ever heard. And to go back to my original point, if we can just modify the trajectory early, I'm not saying there will never be regrets, but that regret is unlikely. So is the regret that I started saving too late.
Yeah.
I took on too much debt because I thought the limit set by the bank was a good limit for me. And, if I can, just on that point about debt, Rick, if you allow a bank or a car dealer or any sort of lending officer make a decision for you on what is the right amount of debt for you, you've abdicated your responsibility to you and your family. You decide what's the right. And I'm not against debt. Having capacity to borrow is really helpful. What you've got to do is manage it diligently. And here's the point that people miss about debt. Debt is a commitment to use tomorrow's earnings to pay for yesterday's financial decisions. And that narrows your choices in future. And a good example of that is I hear, and I'm always reluctant to extrapolate my personal experiences to a general statement, but I hear a lot of concern about debt among young couples, whether it's mortgage debt, credit card debt. And I wonder how many times they let someone else decide what their limit should be. I think you take that as useful information.
Yeah, absolutely.
But in the end, it's got to be you and your partner decide, because it's you and your partner that's going to pay that debt, not those other folks.
Yeah, absolutely. Well, you know what, Wallace, this has been a great conversation. I want to say a big thank you very much for joining me on the Mayor of Money podcast. This has been really enlightening. And I want to remind everybody about this book. For those of you who are watching on YouTube, I'm showing it right now. It's Love and Money, Conversations to Have Before You Get Married by Wallace M. Howick. And Wallace, I assume you can get that all the regular places? You can get it
yes,
different drummer bookstore in Burlington, the independent bookstores, as well as online.
Yes, absolutely.
But Wallace, thank you very much. I wish you all the best with this book. I wish you all the best in the outreach work that you're doing and helping people with financial literacy and financial capability. And I do see another book in your future. Congratulations on the book. Thanks for joining me.
Thank you for having me, Rick. Have a good day. Cheers.
Thanks. Thank you.
Thank you for listening to the Mayor of Money podcast. Click the subscribe button below to be notified when new episodes become available. If you'd like to have a one-on-one discussion with Rick or have an idea for a particular guest or topic, contact him at rick@rickgoldring.com. See you next time on the Mayor of Money podcast.